Yes, students. Now we will go through the questions from ICI material on chapter 7. First one is multiple choice question. The first question, under the non-integrated accounting system, dash. It is like dash. Same ledger is maintained for cost and financial accounts by accountants. No, that is under integrated. Separate ledgers are maintained for cost and financial accounts. A and B both, none of the above. So the answer is B, guys. Separate ledgers are maintained for cost and financial accounts. Notional cost may be included in integrated accounts. No, because both are merged. So we will not consider it. May be included in non-integrated accounts. Yes, correct. But let us read the other options. Cannot be included in non-integrated accounts. None of the above. So the answer is D, guys. Just to calculate the actual cost under non-integrated in cost books, we can include it. Then coming to the third one, under non-integrated accounting system, the account made to complete double entry system is stores ledger, work in progress, finished goods, general ledger. Which is it? General ledger adjustment account, guys. Fourth one, integrated systems of account are maintained in a separate books of integrated it is. In separate books of accounts for costing and financial accounting, no, that is under non-integrated. In same books of accounts, both A and B, none of the above. B. B is the answer. Fifth one, under non-integrated system of accounting, purchase of raw material is debited to which account? First of all, just analyze the journal entry. Don't go through the option also. Sir, what is the journal entry? For purchase of raw material, stores ledger to general ledger or cost ledger. Correct? Now, they're asking which one will be debited. Which one is it? Stores ledger, or we also call it as material control, guys. Material control or stores ledger. One and the same. Then the other options you see, general ledger, purchase account, none of the above. Guys, general ledger also will be used in the journal entry, but it will be credited. It would be credited. Please be careful. Sixth one, under non-integrated accounts, if the materials worth 1,500 are purchased for a specific job, then which account will be debited, guys? Right away WAP account. Instead of receiving in the stores and then sending it to the WAP account, straight away we'll receive it in WAP account. So special job account or work in progress account, that is the answer. Material control account, cost control account, none of the above. Right? If it is a regular material and all, we normally purchase and receive it in materials and then send it to the WAP account. Clear? So first we will record normally in material control account or store ledger and then issue to the production through WAP account. But here, as it is a for purchase for a special job, straight away it is A, guys. Then coming to seventh one. Which account is to be debited if materials worth 500 are returned to vendor? Vendor means purchase returns under non-integrated accounts. Guys, purchase returns entry. What is the purchase return entry? General ledger adjustment account to store ledger. So they're asking which will be debited. Debited. Cost ledger. Cost ledger or general ledger is one and the same, guys. Finished goods control account, WAP control account, none of the above. So the answer is A. Which of the following items is included in cost accounts? Notional rent, donation, transfer to general reserve, rent receivable. Which of the following items is included? Please be careful. Notional, donation, transfer to general reserve, rent receivable. Guys, these three are pure financial items. Pure financial items. So that means notional rent, can it be considered in cost books? Yes, so it can be. When costing loss is 5,600, administrative overhead under observed being 600, that is in cost books. The loss as per financial account should be, guys, our starting point is negative 5,600 costing loss. Now we need to find out financial loss. Now there is an under absorption, guys. Even though it is a loss, I have told you, you have to analyze from what point of view? Profit point of view. Anyway, my starting point I have put it in the bracket, so it will be automatically taken care. Okay, sir. So what is it? Under absorbed in cost books. Administrative overhead under absorbed means you have recorded the expenditure less. Because of it, your costing profit would have gone up. I am analyzing from profit point of view. I know in the question it is loss anta, but still I am analyzing from profit point of view. Again, I will repeat. Guys, in cost books, in cost books, we have recorded the expenses less. We have recorded the expenses less. So in that case, what should we do? Sir, already my costing profit. Stay out. You can come later in the break. So now Sir, in my costing profit, we have recorded the expenses less. We have recorded the expenses less. That means my costing profit has gone down or gone up? It has gone up. It has gone up. Okay, sir. Now, in order to match it with financial profit, what should I do? Deduct it. Deduct it. Okay, sir. Let me deduct. How much is that? 600. 600. So minus minus, you know now, it should be plus. So 6,200. It is a financial loss. So 6,200 financial loss. Okay, so 10th one. Which of the following items should be added to costing profit to arrive at financial profit? Okay, which should be added to costing profit? Clear? To derive at financial profit. We'll see one by one. Over absorption of work overhead, interest paid to debenture, income tax paid, all of them. Guys, now we are in costing profit. We need to find financial profit. They are asking what to be added. So we'll see one by one. Over absorption of work overhead. Guys, over absorption means we have charged more expenses in costing books. Because of it, my costing profit has come down. If I have to match it with financial profit, what should I do? Add it up. Add it up. Okay. Let us see other also because all of the option is there. All of the above is there. Clear. Let us analyze the other also. Interest paid on debenture. Guys, interest paid on debenture is recorded only in financial books because of which it is an expenses. So please be careful. Interest can be both income as well as expenses. But here clearly they are told paid. So we have recorded in financial books. So that means my financial profit has come down. Whereas my costing profit is same because we have not recorded. Now if I have to match my costing profit with financial profit, what should I do? Deduct. Deduct it. Okay, so this is deduct. So not my option. Income tax paid also same story. Pure financial expenses. So if I have to match, I have to deduct it. Okay, sir. So all of the above is not an option. So the answer is A, guys. Answer is A. Guys, questions, please go through all the options and decide because as soon as you see the first option, you feel like it is correct answer. It might be correct, but still check the other options also. Check the other options also because especially here all of the above was there. So I have to check the other two also once. Oh, theoretical questions you can go through. Coming to the practical problems. Practical problems, guys. The following incomplete accounts are furnished to you for the month ended 31st October 2022. What are those, sir? Opening balances, guys. Opening balance. Please stay away. Stores ledger control account. 1st October to balance 54,000. Out. 1st October to balance 54,000. Opening balance. That is nothing but opening stock of raw material. Yes, sir. Work in process account. That is nothing but WAP. To balance 6,000. Opening balance again. Finished goods control account. 1st October to balance 75,000. Factory overhead control account. Guys, observe the word what they have used. Total debits for October 2022. That means not a opening balance. Total debit. That means can I call it as incurred? Guys, what will you debit in overhead account? Incurred, right? Yes, they are not giving you opening balance. Did they tell on 1st October this is the balance? No, no, no. Observe the word. Total debits for October. That means throughout the October, this is what you have incurred. This is what you have incurred. 45,000. Factory overhead applied account. Nothing is given. Cost of goods sold account. Okay. Creditors for purchase account. That means you have purchased on credit basis. Opening balance. This is opening balance is how much? 1st October. 30,000. By balance. That means credit balance. That means credit balance. Hope you guys got it. Okay. Next. Additional information. The factory overheads are applied by using a budgeted rate based on direct labor hours. The budget for overheads, only budget overheads for 2022. Scratch that for here. For 2022 is 6,75,000. And the budget of direct labor hours is 4,50,000. Guys, if I ask you, sir, what is the predetermined overhead rate? How much is that? 6,75,000 divided by 4,50,000. 1.5. 1.5 per hour or per labor. Per hour or per labor hour. The balance in the account of creditors for purchases on 31st October is 15,000. Closing balance of creditors. And payments made to creditors in October 2022 amount to 1,05,000. That means, guys, they have given opening balance, closing balance, payment made to creditors. If I drop the creditors account, can I derive the purchases? Can I derive the purchases? Yes, the balancing figure in the creditors account could be purchases. The finished goods inventory as on 31st October, closing stock of finished goods 66,000. Cost of goods sold during the month was 1,95,000. On 31st October 2022, there was only one unfinished job in the factory. The cost records show that 3,000, that is 1,200 direct labor hours of direct labor cost. Okay, 3,000 is the cost, but how many hours the labor have worked? 1,200. And 6,000 of direct material cost had been charged. This is closing WAP, guys. It is partly done. How much work has been done and all they have told. So if I just ask you, what is the labor cost and material cost? 3 plus 6. 3 plus 6. A total of 28,200 direct labor hours were worked in October 2022. All factory workers earn same rate of pay. All actual factory overheads incurred in October have been posted. Okay, so actual labor hours worked is how much? 28,200. Now, if I ask you how much is factory overhead observed? 1.5 per hour factory overhead per hour. How many hours we have worked? 28,200. Multiply both, you will get factory overhead observed. Factory overhead observed. Okay. What all you are supposed to calculate? Materials purchased during October 2022, cost of goods completed in October 2022, overheads applied to production in October 2022. Overheads applied to production is nothing but observed. Balance of work in process account on 31st October, that is closing stock. Sir, here only given, no sir, just add up and tell 3,000 and 6,000. Overhead also will be there. Overhead also will be there. Very easy. 1,200 hours they work into 1.5 plus 3,000 plus 6,000. Clear? Labor material is already given. Overheads we need to find out. How, sir? They have given clearly how many hours the laborers have worked. Into absorption rate is what? 1.5 multiply. You will get the overhead element also. Yes. Direct material consumed during October 2022. Balance of stores ledger control account as on 31st October, that is closing stock of raw material. Over absorbed or under absorbed overhead for October 2022. Sure. We'll see one by one. Come to the solution. Yeah. So one by first working notes, some working notes. So much they have written. So simple. Overhead absorption rate is what? 1.5 per direct labor hours. So how they have calculated? Budgeted for factory overhead, budgeted direct labor hours, divide each other, you will get 1.5. Then wage rate per hour. Wage rate per hour. That guys for WAP they have given 3,000 is the labor cost and they work for how many hours? 1,200. Can we calculate per hour how much? Yes, sir. 3,000 is the labor cost of WAP. For that, how many hours they have worked? 1,200 hours. So 3,000 divided by 1,200 hours is equal to 2.5. 2.5 hours. Then coming to total direct wages charged to production. Charged to production. We are observing for each and every hour 2.5. Wages, so not overhead. For wages, sir, listen. For every hour, how much we are paying? 2.5. So, totally how much we have paid for actual hours work? 70,500. Guys, what I am calculating is wages, not overheads. Overheads we will do later. Clear? Huh? Yes. Then overhead absorbed also somewhere they would have done. Yeah. Here you can see. See, 28,200 hours labor hours work. For each hour, what is a predetermined overhead rate? First working note, 1.5. 42,300. Guys, you might get confused with overhead and labor charges. Please be careful. This is labor charges. Per hour they are not given. Can we calculate? Yes, using what? WAP information. Using WAP information, we can calculate per hour how much. Per hour how much. Once we found out per hour how much, we know that labor hours worked is 28,200 hours. Multiply that with rate per hour. Rate per hour. you will get what is the total wages or labor cost. Next, material purchased during the year. They have not done the account, they have just done the plus minus the equation. What is that? We will see. Payment made to creditors 1,05,000 given in the question. Add closing balance in the account of creditors, which is given in somewhere adjustments tax 15,000. Opening balance is given in the first table. How much? 30,000. 30,000. So what is the material purchase? 90,000. Assume entire purchase is on credit basis. Entire purchase is on credit basis. Sir, can I find out this through an account, sir? Yes. So for example, if I am drawing an account instead of a statement, they have done it as a statement. Can I do it as an account, sir? Yes, you can do it. Nothing wrong. So assume creditors account by balance brought down. How much is the opening balance? Huh? 30,000. To balance carried down. Closing balance 15,000. Then what is the entry for purchases, guys? What is the entry for purchases? Purchases to creditors. Correct? Do we know this? No, sir. I will keep it as balancing figure. What is the entry for payment made to creditors? Now creditors is the liability for me. When I pay, creditors will go. Creditors to bank. Creditors to bank. But here it is non-integrated, na? Okay. To bank instead of that. General ledger adjustment account or cost ledger. How much is that? Huh? 1,05,000. Now tally the account. 1,20,000. 1,20,000. 120, 120. Balancing figure now. 90,000. Balancing figure is 90,000. 90,000. So purchase is 90,000. Yes, you can do this way also, guys. You can do this way also. Here also will we get the same answer, sir? Yes, sir. Same 90 we have got it. Guys, please be careful. Entire purchase is assumed to be on credit. If you want, you can mention here. Entire purchase is assumed to be on credit. Okay, sir. Next, cost of goods sold. Cost of goods sold is given. Through that, can we calculate COP? Yes. Guys, you already know the equation, na? Cost of production plus opening stock of finished goods minus closing stock of finished goods will give you what? COGS. Cost of goods sold. Cost of goods sold. Okay. Now we have to go reverse the step. COGS is given 1,95,000. Closing stock and opening stock of finished goods is given. So how much is that? Closing stock is 66,000, which I am adding here because I am going reverse. Minus opening stock of finished goods will give you what? COGS. 1 lakh, sorry, cost of goods completed. That is nothing but COP. Cost of production, which is 1,86,000. As we have gone reverse, plus will become minus, minus will become plus. Hope you understood. This is the equation we normally use. Cost of production plus opening stock of finished goods minus closing stock of finished goods will give us cost of goods sold. I am just going reverse. That means if you send this to guys, opening stock and closing stock to the opposite side, it will become opposite sign. Plus will become minus, minus will become plus. Okay, absorption I already discussed. Now coming to balance of work in progress at the end of the year. Direct material, direct labor, they only given us. Now can we calculate overheads? Yes. We know that labor hours worked on WIP is 1,200 hours. For each hour, what is the absorption rate? 1.5. 1.5. So what's the closing WIP value? 10,800. 10,800. Next, direct material consumed during October 2022. 78,000. They have done it. Let us see how they have done. Okay. First, work in progress account. Work in progress account. You can see balance, opening balance is given, closing balance we found out just now, 10,800. Write it. Then COP also we have found out against cost of production, 1,86,000. Write it. We know now we will send it from WIP account to finished goods control account. What is the entry? Finished goods control to WIP control account. Yes, sir. Now, wages control account. Refer to working note. Sir, 70,500. What we have observed? 70,500. Then it starts to the production. Okay, sir. They would have received it, na? Because this is the amount which is transferred from wages account to WAP control account. We would have received it. Okay, sir. What about the raw material? We will keep it as a balancing figure because we don't know this. Raw material consumed means issued to the production. Do we know it? No, we don't know. Let us keep it as balancing figure. Then factory overhead observed, we know? Yes, sir. We have calculated in working note. Here, 42,300. 42,300. Correct, no guys? Factory overhead observed or manufacturing overhead observed will be transferred to which, from which account to which account? From factory overhead to WAP control. What is the entry? WAP control to factory overhead. So that means WAP control will receive it? Yes, they will receive it. Now the balancing figure, material consumed means direct material. Direct material. Sir, how can we calculate it, sir? 186 plus 10,800, you will get 196,800 minus the debit side, guys. Minus 6,000 minus 70,500 minus 42,300. You will get it as 78,000. That is our balancing figure here. That is the raw material consumed. The raw material consumed here is nothing but direct material issued to the production. Obviously, what is issued is consumed. Na? Even in stores ledger, we used to calculate it. Yes, sir. What is issued here from stores to here, stores ledger to production, or that is WAP account, is assumed to be consumed. So it is nothing but, guys, direct material issued to production. Okay, so coming to closing stock of raw material, which is not given, we need to find out, guys. Now, opening balance, do we know? Yes, they have given it in the question. Now, just now we calculated raw material consumed. Yes, which is nothing but direct material issued. Direct material issued. What's the entry for it? WAP control to store stage. Okay, sir. Then purchases, we have recorded 90,000. We found out there 90,000 is the purchases. Yes, so for purchase, what is the entry? Stores ledger to creditors or payables. Correct? Because we are assuming it to be credit purchase. Clear? Yes. So now what is the balancing figure? Add up the debit side. You will get 144 minus 78. So the balancing figure is 66,000, which is closing stock of raw materials. Next, over observed or under observed overheads for October 2022. Balance in factory overhead account below showing that 2,700 is under observed. Sir, how is it? Simple. We have paid totally how much tax? 45,000. We have paid totally overhead 45,000. Incurred. They are given in the question. Debit of total debits and total debit is nothing but incurred. Okay. Observed is how much? 42,300. We found out in a working note. Okay, sir. So 45 is on the debit side, which is nothing but incurred. Observed is 42,300. What is the difference, guys? There is an under absorption. Under absorption of how much? 2,700, which is nothing but balancing figure. Which is nothing but balancing figure. Oh, fine. It was an interesting question. Let us move forward. Let us move forward for the second question. Question number. A company operates on historic job cost accounting system, which is not integrated. That means they are following what? Non-integrated with the financial accounts. At the beginning of a month, the opening balance in cost ledger where opening balances are shared. Pay attention. Stores ledger control account. Opening balance 80. Work in progress control account 20. Finished goods control account 430. Building construction account asset guys 10. Okay, all this will have what? Debit balance. Debit balance. Cost ledger control account will have what balance? Credit balance. They are not mentioned, no sir. You should understand this. During the month, the following transaction took place one by one. Material purchase 40, issued to production 50, issued to factory maintenance 6, issued to building construction something different in this question. Clear? Issued to building construction under separate maintain separate account for building construction, receive it there. That's all. 4 rupees. Oh, sorry, 4 lakh. Everything is in lakhs. Wages. Gross wages paid 150. Indirect wages 40. For building construction 10. Remaining 100 is for what guys? Direct. Remaining totally incurred 150. This both put together 50. Remaining 100 is what? Direct. That is for production. Works overhead. Actual amount incurred 160, excluding items shown above. Okay. Means indirect if anything is received other than that. Observed in building construction 20, under observed they only given 8. Under observed they only given 8. Remaining is what guys? Observed. Where? To WAP control account. Remaining is what? Observed to WAP control account. Royalty paid related to production 5 lakh. Guys, this is nothing but direct expenses. Direct expenses because it is related to production. Selling, distribution and administrative overhead 25 lakh. Sales 450 lakh. At the end of the month, the stock of raw material and work in progress was closing stock 55 lakh and 25 lakh respectively. The loss arising in raw material accounts is treated as factory overheads. Okay, whatever is the loss, actually if there is any abnormal loss and all, we normally transfer it to which account? Cost in P&L. Here they are telling you to treat it as factory overheads. Factory overhead. So whatever is the loss in stores ledger guys or material control account, where do you transfer it to? Factory or work overhead. Okay, sir. The building under construction was completed during the month. Okay, building whichever was under construction, now it is completed. Company's gross profit margin is 20% on sales. Prepare the relevant control accounts to record the above transaction in cost ledger of the company. Guys, when they ask relevant, whichever account you are using in the journal entry, all those accounts you have to prepare. All those accounts you have to prepare. So, we'll see one by one. It is again under non-integrated. Second. Okay. First thing what you do is draw all the accounts, guys. Okay, whichever you will know now. Once you read the question, you will have an idea what all accounts you have to draw. First, draw all the accounts, bring the opening balances. Bring the opening balances. Stock ledger opening debit balance. So, then work overhead, is there any balance? I don't think so. Then this one, work in progress account, debit balance. Then finished goods account, debit balance. That's all. Only this accounts have a balances, guys. Oh, now let us see the transactions one by one. Let us see the transactions one by one quickly. First, I will try to cover it up together. List of transaction. Yeah. First, let us see this part. Purchased 40. Guys, what is the entry for purchase? What is the name of the account we are using? Stores ledger. Stores ledger to cost ledger. Stores ledger to cost ledger. Issued to production. WAP control to stores ledger. Issued to factory maintenance. For that, what is the name? Okay, they are not given anything. You can use factory overhead or works overhead. Any one. Use one common name. Okay, so factory overhead account 2. What? Stores ledger. Then issued to building also. Same. Building construction 2. Stores ledger. And I guess we have some loss here. They have told. Treat it as what, guys? Factory overhead. Treat it as factory overhead. Sure, we'll see. Yeah, stores ledger. Come on, quickly. Sir, opening balance already 80 is there. We purchased 40. What is the entry? Stores ledger to cost ledger. Then for production, we are issuing 50. What is the entry? WAP to stores ledger. Go and receive it quickly. Tuck, 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 tuck. Where is it? Receive it. Okay, sir. Then even in cost ledger, we have to pass this entry 40. That is for purchase. Yes, sir. Then work overhead control account. That is indirect. We are issuing it. So we are maintaining the account name as work overhead. Sir, can you use it as factory overhead? There's nothing wrong. Okay, 6. You receive it. 6 rupees you receive it. Okay, so next, building construction we are issuing 4. We are issuing 4. So building construction account, where is it? Okay, building construction opening balance also it was having 10 lakh. You bring it plus 4 whatever we are issuing now. For whatever we are issuing it. Keep on posting it to both the accounts then and there only, guys. It is not like you will close first full stores ledger and then open other accounts. Don't do that. It will be confusing and time taking both. Okay, sir. Then they told what closing balance have they given? Yes, 55 they have given it. Yeah, yes, sir. They have given it in adjustment 55. Okay, sir. Now remaining balancing figure is what, guys? Fine. They have told treat it as work overhead or factory overhead. So transfer it to work overhead. Fine. Here it is. Fine. And guys, while posting the entries also, follow the same order how they have given it in the question. Clear? I am trying to do everything related to stores in one shot. Yeah? Yes. Done. Stores part done. Store part done. We have closed the account. The balancing figure is fine. Oh, now let us move to the next part. Next set of transaction. Wages. Wages. Gross wages paid 150. What is the entry? Wages control to cost ledger. Then indirect wages 40. Where do you issue to? Work overhead. Work overhead to wages control. For building construction 10. What is the entry? Building construction to wages control. Remaining will go where, guys? To WAP control. Assume the remaining, that is balancing figure is how much? 100. Assume it to be for production. Okay, so what is the entry? WAP control to wages control. Sure. So first, incurred entry, wages control to cost ledger. Wages control to cost ledger. Okay, sir. Posted in both the place. Next, issued to indirect wages 40. So go and receive it in work over it 40. Then we have issued to building. How much, sir? 10. So go and receive it in the building account. Go and receive it in the building account. Very simple. Keep posting in both the accounts. Okay, so where is wages? Last one, balance figure. You try to tally. Debit side 150, credit side 150 should be there. That means 100 is what? Balancing figure. Work in progress. Guys, see how to post each and every entry and how to close. Closing of accounts always at the end only. Close all the accounts at the end. But here I am just going account by account. Yeah, in the class we have solved good number of questions where I have told you how to open the account, how to keep on posting it, and how to close it. Close it is normally at the end. Close from source ledger to costing P&L account, and at the end come and close cost ledger. Cost ledger. Yes, sir. Yeah, fine. So let us move on. Work overheads. Coming to this part. Actual amount incurred 160. What is the entry, guys? Work overhead control account to cost ledger. Okay. Observed in building construction. So transfer it to building construction account. What is the entry? Building construction to work overhead control account. Under observed, they only told. What is the entry, guys? Costing P&L account to work overhead control account. Remaining, whatever is the balancing figure, it is observed. Whatever is the balancing figure, it is observed. For observed, where do we send it to? WAP control account. What is the entry? WAP control account debit to works overhead account. Works overhead. Yes. First, incurred entry or recording. Work overhead control to cost ledger control account. This is for incurred. So first, next we are transfer. Okay, first let us post it here also. Work overhead control account. Okay, so now coming to your building construction, we are transferring 20. Entry would be building construction to work overhead. Go and receive it here in the work building construction of 20 lakh receive. Okay, so then they told under absorption 8 lakh. Try to put it at the last guys because after absorption only we will get under absorption. This we will find it out as balancing figure, but it should be coming before under absorption. Yeah, plan that accordingly. If you are writing, obviously you will write first under absorption, then only we will get balancing figure. But leave space and write. Leave space and write because guys, under absorption or over absorption will come only after you observe. Before you observe only, you cannot tell how much is under absorption or over absorption. Clear? So in this account, they have already given under absorption. So now tally the account. Debit side total is 211. Credit side also it should be same. That means the balancing figure is overhead absorbed. What is the entry for it? WAP control to. WAP control to works overhead. Go and receive it here. Go and receive it, guys. Wages control also you have to receive it here. That is direct. Then work overhead absorbed. Work overhead observed. Then costing P&L account, whatever you have transferred here, go and receive it there. Costing P&L account, yes. Work overhead under observed. Work overhead under observed. Okay, so sure. Overhead part done. I guess one more next entry is royalty paid. Royalty paid. Guys, see royalty paid straight away you can record it in WAP control account only. I have told you other direct expenses directly record it in WAP control accounts. What is the entry there, sir? WAP control to cost ledger. But in this question, they have maintained a separate account for it, which I don't suggest. Which I don't suggest. Sir, if I do, is it wrong? No, no, no. One extra account has to. So what do they do? Here, royalty to cost ledger they record. So in cost ledger also recorded royalty. Yes, sir. Then whatever royalty is there, they have transferred it to WAP control. As it is the direct expenses, they have transferred it to WAP control account. WAP control account. Instead of this straight away, can I record it in WAP control account, sir? Yes, you can skip that one account. Oh, next watch. Next watch. So this is taken care. Selling and distribution overhead 25. Sales 450. Okay, so let us go to the solution. Selling and distribution overhead account. Yes, here it is. Oh, selling and distribution to cost ledger control account. So now go and record it in cost ledger also. Selling and distribution, sir. Selling and distribution. Administrative overhead, selling and distribution, everything one name they have given. Okay, 25. Is it including administration? Oh, selling, distribution, and administrative overhead 25 lakh. Now, guys, they have not given anything about absorption, but assume entire amount is absorbed. Why is that? Because they are making sales. Now, for making sales, we should know what is the cost of sales, cost of goods sold and all. Yes. So we are assuming entire amount is absorbed. Give a note for it. Selling, distribution, and administrative overhead incurred is assumed to be absorbed. So what is the entry for it? Cost of sales account debit to selling, distribution, and administration. Clear? As all three are there, guys, don't send it to finished goods control account. Send it to what? Straight away. Cost of sales, guys. 25. Because selling and distribution is also merged here. Cost of sales. Where is our cost of sales? Here itself. 25. 25 lakh. Okay, so anything else? Sales also is given. Oh, sales we will take care later. Guys, listen. Some things which we have to take care. Okay. Stores ledger we have closed. Wages control we have closed. Work overhead also I guess we have closed. Royalty we have closed. Work in progress. Work in progress. Sir, in work in progress account, what is the balancing figure here? Cost of production. Cost of production. We are sending to which account now? Finished goods control account. But we call it as COP, guys. Cost of production. We will receive it here. We will receive it here. Guys, one link is given in the question. What is it? Profit on sales is, gross profit on sales is 20%. So can I tell COGS is 80%? Hello? COGS is 80%? Yes, guys, listen here. I have told you on this. I stressed on this when I was explaining in the class also. Conceptually, how do you calculate gross profit? How do you calculate gross profit? Sales minus COGS, correct? Yes. So they have told, assume this is 100, this is 20. How much is COGS now? 80. Correct? 80%. But guys, while transferring the profits and all, while transferring the profit from one account to another account, we normally record sales in sales account. Yes. So there, whatever profit we get is nothing but sales minus cost of sales. But just to give a name for it, we use the name GP. We use the name GP, that is gross profit. Whereas whatever profit we get in the costing P&L account, which we transfer to cost ledger, what do we name it as? Net profit. But I mentioned there, actually gross profit is not sales minus cost of sales. Actually gross profit is sales minus COGS. Just to differentiate between two profits, I have to name them differently. Na? I cannot use both the profit word. So that is why we use the word gross profit, net profit there. But actually gross profit means sales minus COGS, which will help you here for calculation. Now, in finished goods control account, the balancing figure would be what, guys? COGS. COGS. Is it given in the question? No. But can we calculate? Yes. How is it, sir? Sales into 80%. Sales into 80%. Sales is given as 450 into 80% of that is my cost of goods sold. Cost of goods sold, which comes to 360. 360. Hope you guys are getting it. Clear? Na? Yes. Now, finished goods control account. Closing stock of finished goods is it given? Hello? Stock of raw material and work in progress is only given. Whereas finished goods is not given. So, in finished goods control account, that will be the balance figure. That would be the balancing figure. Better mention it. This would be the balancing figure, guys. Closing stock of finished goods. Closing stock of WAP and raw material is given, but not finished goods. Okay, sir. They have done a separate cost of goods sold account, guys. I don't suggest it. Straight away, whatever is the cost of goods sold, the amount is called cost of goods. You can straight away send it to cost of sales account. You can straight away send it to cost of sales account. And whatever selling and distribution overhead observed will be there, you take it, the total amount. Cost of goods sold plus selling and distribution overhead observed will be what? Cost of sales, which you transfer it to sales. Clear? Yes. Sir, is it wrong to maintain cost of goods sold account? No, extra account. Clear? Debit to credit to equivalent amount. Why to maintain? Okay. So whatever is transferred, guys, is received here and they are transferring it to cost of sales. Cost of sales account. Guys, it is transferred to cost of sales account, but the name is called what? Cost of goods sold. The amount is called cost of goods sold. Instead of that, here itself, can I transfer to cost of sales account, sir? Yes. Oh. Then coming to selling and distribution, we already observed 25, guys. So now we are receiving 360 from cost of goods sold. If you have transferred straight away from finished goods control account itself, then you have to write here FG control account. Finished goods control account. Now, what is actually cost of sales? 360 plus 25. They have transferred it to costing P&L account. See, normally I will maintain it in sales account. I will transfer it to sales account, but here they are straight away transferring it to costing P&L account. That means they will record sales where? In costing P&L account. If you guys remember, I had mentioned this alternatively, we can do this. Instead of maintaining sales account, see, I will tell you. First alternate is cost of sales, we will transfer it to sales account. In sales account, we will record the sales. Whatever is the profit, we will transfer it to costing P&L. Instead of that, can I avoid sales account and straight away send the cost of sales to costing P&L account? Yes. In that case, you have to record sales also in costing P&L account. Clear? Yes. So that means here they have eliminated sales account. Sir, is it wrong? No, it is also right way. Because simple guys, you send cost of sales to sales account, record sales in sales account. There, whatever profit you get, where do you send it to? Costing P&L account. Instead of that, they are doing cost of sales on the debit side of costing P&L account, credit side sales they are recording. Automatically profit is taken care. Automatically profit is taken care. Okay, sir. Sure. Now coming to costing P&L account. You can observe cost of sales is on the debit side. Now on the credit side, we are recording sales. What is the entry now? In as per this question, what is the entry? Cost ledger control account 2. Costing P&L. As we are not recording in sales account, don't use 2 sales. It is 2 costing P&L account. Sir, if you want to open sales account, sir, can I do it? Nothing wrong. Nothing wrong, guys. Clear. End result should remain same. That's all. Here also you can observe they have opened little extra account, COGS account or royalty account and all. Is it wrong? No. They have taken extra pain there, whereas they have tried to reduce in sales account by skipping sales account. By skipping sales account. Okay, sir. All these are alternate ways, guys. Fine, sir. What is the ultimate profit, sir? 57 rupees, which we call it as net profit or just a profit here. Because here only one profit is there, we need not worry. What is gross profit, what is net profit? Here only one profit we are calculating. Okay, sir. How much is that? 57. 57 lakhs. Transfer it to what? Cost, ledger, control account. Sales as well as profit. Both we have to take care of. Okay. 450 sales, so then profit 57. Better mention here, bracket. Profit. Profit. Okay, sir. Now we have closed the accounts one by one. We will check. Is it closed? Work in progress. We have closed. Yes. Finished goods control account we have closed. Yes. COGS we have closed. Selling and distribution we have closed. Cost of sales we have closed. Costing P&L we have closed. Building construction. Guys, the building construction is an asset. It is nothing like an asset building account. Yes. They have told building is completed. Completed. See, we have two choice here. At the end, you can just keep it as balance carried down 44 lakh. Asset building is an asset. Just keep it as a balance carried down. Or else here what they have done is they have transferred it to cost ledger control account. I don't find it logical. Better keep it as an asset because building is an asset. Now you are like closing it by transferring it to what? Cost ledger. Will you use the building going forward? Yes, sir. So I think it should be aligned. Instead of killing it or making it dead by transferring it to cost ledger account, better keep it alive. Okay, that means in my opinion it should be like by balance carried on. By balance carried on. Or here what they have done is they have transferred it to cost ledger. Just because they have used the word completed, so that is why they have transferred it to cost ledger. 44. At the end, trial balance will tally, no problem with that. But is it a right treatment? In my opinion, not so. Yeah, better keep it as balance carried on. No, sir, ICI, my motherboard, I want to follow the same is you can follow. Nothing wrong for me. No problem for me. Oh, sure. This would be the balancing figure here. If I close this account, this would be the balancing figure. At the end, have they done the trial balance also? Or trial balance also they have done it. See, if at all, if you keep the building account as balance carried out, even that will come on the debit side and automatically cost ledger balance will go down. Go up actually. Okay, go up to tally. To tally. That is an alternate way. I'm just suggesting you. However, you guys are comfortable, you can follow it. Okay, if at all, if this kind of questions comes. Oh, sure, we'll move forward. Third question next. Non-integrated we have done. Now on third question is on integrated. Third question is on integrated. Data Enterprises operates an integral system of accounting. You are required to pass the journal entries for the following transaction that took place for the year ended 31st March. Narrations are not required. Only when they give the dialogue like this, you ignore it. You only don't create the dialogue and put it there. Clear? Huh? Some students do that. Our narration is assumed to be ignored. Clear? Huh? Guys, if the sentence is not given, then please write the narrations. Please write the narrations. You don't make yourself easy there. Huh? Sure. We are under integrated. Integrated. Okay. Raw material purchase 50% is on credit. 6 lakh. Guys, come on. What is the entry? Stores ledger or material control. Whichever you want, you can use, but use one number. Let me use stores ledger. Stores ledger 2. What and all? Stores ledger account debit 6 lakh. To bank 3 lakh. To creditors 3 lakh. Or payables. You can use either creditors or payables. Then material issued to production 4 lakh. What is the entry tax? WAP control account 2. Stores ledger. Wages paid 2 lakh. In that 50% is direct expense. Okay. First let us record it. Wait, and what about indirect, sir? Sir, remaining 2 lakh, can I consider it as indirect? Guys, we cannot conclude because there can be opening stock, closing stock. Clear? Huh? So you don't conclude anything about indirect here. Okay, coming to wages paid. 50% direct, 2 lakh. So first entry for incurred or paid. Wages controlled to bank. Then we will transfer direct and indirect tax. So wages charged to production 1 lakh. They only given the end. So remaining 1 lakh is indirect. Understood though. Sir, wages account will it have any opening balance? No. Please see guys, listen. Look at my explanation. Here, remaining 2 lakh I didn't consider it as indirect. Why? Because we may have opening and closing balance. We are not sure about it. So let me not text that. Only direct material they have told issued to the production, pass entry only for. Whereas here, they have told incurred is 2 lakh, 1 lakh is for production. Remaining 1 lakh is for what? Indirect. Where do you send it to? Factory overhead. Factory overhead account to wages control. Because wages control account normally will not have opening balance and closing balance. So I can consider out of 2 lakh, 1 lakh is for production, means remaining 1 lakh is for indirect. Indirect. Let us see how they consider like that. Just a minute. Oh, yes. First purchase so then issued to the production. No? No. You can see issued to indirect they are not considered. Indirect material they are not considered, guys. Okay. Wages paid, then indirect they have taken first, then direct. Oh, hope you understood. This is indirect wages. This is direct wages, guys. Hope you guys got it. And here they have passed entry only for direct material, but they have not passed it for indirect material. Please take care of it. Okay. Okay, sir. Then, done with this. Factory overhead income. What is the entry? Hello, Uma Maheshwari. Factory overhead control account debit to bank account. What is the 80 amount? 80,000, 80,000. Factory overhead charge to production, where it will be charged to WAP control account. What is the entry? WAP control to factory overhead control account. Okay, so selling and distribution overhead incurred. How much is, sir? 40,000. What is the entry? Selling and distribution overhead control account debit to bank account. Yes, sir. Finished good at cost. Cost of production. Cost of production. What is the entry for it? WAP control account. Sorry, finished goods control account to WAP control. We send it from WAP to finished goods. What is the entry, guys? Finished goods control account to WAP control account. Okay. Sales is given, guys. See, for selling and distribution only incurred is given. Sir, they are also giving sales and all. So for sales, we should know cost of goods sold or cost of sales. Yes, sir. They are not given anything about selling and distribution overhead observed. Can I assume it to be whatever is incurred is observed? Yes. Clear. Now you can see even selling overheads and all can be having opening balance. But for this question, when question is signed in, sir, without observing selling and distribution overhead, can we sell the product? No. They are not given anything about absorption. What is the better assumption I can do? Observe fully. Whatever is incurred, observe it as. So let me just show it how they consider it or not. Okay, this is factory overhead. This is for cost of production, selling and distribution incurred. Observed, they are not taken. Oh, here they are taken. Here. Okay, better you pass separate entry. This is nothing but observed this. Observed 40. Got it? So this is for cost of production. They are transferred. Sure. Now, silence. Now, in finished goods control account, they are not given any opening balances, closing balances. Now, sir, I have to transfer to cost of sales account. Yes. Now, how will I do it? I don't have any other option. I will consider whatever is the cost of production is equal to COGS. Is equal to COGS. Okay, sir. So that is it. Whatever they have received, no guys, they are transferring full. Fine. Whatever is received, they are transferring full. This entry might be important for you because you might miss out it. Okay. So selling and distribution overhead observed also 40,000. Now, what is my cost of sales? What is my cost of sales? Guys, this is nothing but COGSO. Okay. Plus selling and distribution overhead observed will give you one cost of sales. We are transferring it to which account? Cost of sales account. Hope you guys are getting it. Sir, why are we doing this? Guys, goods are sold. Obviously, when I have sold, there has to be a transfer from the respective account to the vendor sales account. That is cost of sales account or sales account. Clear? I am assuming for this question, COP is equal to COGS. Assuming there is no opening stock of finished goods, no closing of stock of finished goods. Can we give a note for it? Better give. Better give. Two notes here, guys. It is assumed that selling and distribution overhead incurred is observed. Then there is no opening stock and closing stock of finished goods. Is that clear? Yes. Oh, next let us see. Sales 7,50,000. 50% is on credit. What is the entry, guys? We are under integrated. If it is under non-integrated, no separate entry. Same entry for both. But here, integrated. What is the entry? Bank account debit 3,75,000. Then debtors account debit 3,75,000. To sales account. If you are recording it in sales, you can write sales. No, sir, I am recording it in costing P&L account. Then you write costing P&L. Better go with sales is what I suggest. Yes. Closing stock, they only given as nil. Opening stock also assume it to be nil. They only given. So while writing a note, you write opening stock of finished goods is assumed to be nil because closing stock they only given. Oh, last two entries. Receipt from debtors. What is the entry? Bank to debtors. Then payment to creditors. Creditors to bank. Creditors to banks. That's. Let me just have a look into it. This is sales entry. This is receipt entry. This is payment entry. Okay. And even for receipt and payments, guys, whatever name you would have used here, na, same names you use. So even when purchase, what name you have used? Better you go with creditors, debtors. They have used payables, receivables, and all. That is also fine. Use one name. Use one name so that you will consume less time. If you are writing 2-3 names and all, then obviously it takes time. Yeah, fine. We are done with this. We are done with integrated. Now we have questions on reconciliation. Now we have questions on reconciliations. Come to the question. Fourth question. Question number 4. Ready? Huh? The following information is available from the financial books of a company having a normal production capacity of 60,000 units for the year ended 31st March. Guys, why the capacity will be given is simple. Predetermined overhead rate for fixed overhead rate or fixed overheads will be fixed based on what? Capacity. Will be fixed based on capacity. But we will observe based on what? Actual work. Predetermined overhead rate will be fixed based on capacity. But we will observe based on what? Actual. Okay, sir. Sales 10 lakh, 50,000 units. There was no opening and closing stock of finished goods. That means sales is equal to production. Sales is equal to production. Direct material and direct wages cost were 5 lakh and 2 lakh 50 respectively. Actual factory expenses were 1 lakh 50,000, of which 60% are fixed. 60% are fixed. How much it comes to us? 90,000. 90,000. That means 90 is fixed, 60,000 is variable. Actual administrative expenses were 45,000, which are completely fixed. Actual selling and distribution expenses were 30,000, of which 40% is fixed. That means it comes to 12,000. 12,000 is fixed, remaining 18,000 is variable tax. Interest and dividend received is 15,000. Interest and dividend received is 15,000. Pure financial income. You are required to find out profit as per financial books for the year ended 31st March. Guys, for financial books, no absorption, no under, no over, nothing. Whatever is the actual figures, you will record it. That's all. Clear? There we don't even care about what is variable, what is fixed. Do you care? In advanced accounting or in accounting paper, did you check how much is variable, how much is fixed, and no sir, expenses is expenses, record it. Aste. Now coming to cost. Prepare the cost sheet and ascertain the profit as per the cost accounts for the year ended 31st March, assuming that the indirect expenses are observed on the basis of normal production capacity. You would have fixed the predetermined overhead rate based on normal capacity. Clear? Normal capacity. But you will observe based on what? For each, assume guys, predetermined overhead rate, you have fixed it as 10 rupees per unit. So for each and every unit you produce, how much you will charge? 10 rupees. 10 rupees. Okay. Now you guys can tell me, under costing guys, there will be under absorption or over absorption? Under absorption. Why sir? Because I had planned for 60,000 units. My capacity was 60,000, but we have produced only 50,000 units. That means there will be an under absorption? Yes sir. Why? Simple. While deciding the predetermined overhead rate, I would have considered 60,000 units, not 50,000 units. But while observing, I will observe for how many units? 50,000 units. 50,000 units. That means I have produced less. That means I would have under absorbed, which is general. We will see that. Last requirement, reconciliation of profits. Prepare a statement reconciling profit shown by financial and cost books. All the three things they are asked. When they ask all these three, marks weightage also would be more for this question, guys. Yeah, first profit and loss account. Here nothing but copy paste of all the items, but place it on the right side. Right side and there, I am not talking about my right side. Okay, either debit or credit, whichever is right. Clear? Profit and loss account for the year ended 31st March. DRCR. Okay. Direct material, fine. Direct here they are not differentiated also. Okay. You can do gross profit. For example, till year you can divide first part and second part. Till year it will be direct expenses. Not direct expenses related to factor. Clear. So here you will find out something called as gross profit and then send it to next part. Yeah, but here they are not followed it. Sir, can I also follow the same? Maybe yes. When IBA is following, you can also follow. Clear? Yes. Alright. If you ask me, better give a breakup here. Better give a breakup. Clear? Yes. Okay. Material consumed, wages, factory expenses, administrative expenses, selling and distribution. Everything copy paste. No variable, no fixed, nothing to worry. Sales 10 lakh, interest and dividends 15 lakh. Sorry, 15,000. What is the net profit? 40,000. Financial profit. Asset, 10 and estate. See, if this kind of questions come, sir, I'm running short of time. At least this you can complete. If not reconciliation, at least one or two steps you can complete. It happens sometimes, correct? Sir, I am in the last few minutes. I am not able to complete the paper. If that is the case, you need not write all three sub questions. Okay, I am telling you worst scenario. Okay, don't prepare for that. Sorry, three questions I will answer only A. Only A, B, not C. Answer Allah. Because this will not take much time. Correct? Just copy pasting. Cost sheet also very easy only. Okay, cost sheet or cost statement. Yeah, direct materials as it is, we are taking direct wages as it is coming to over expense. Please be careful with that part. You can mark a star there. Variable is how much? Total is 150. 40% is variable, 60 as it is you take. Whereas fixed overhead we will charge based on what? Predetermined overhead rate. What is the predetermined overhead rate? 90,000 is my amount divided by 60,000. Now we will observe for actual production units. What is actual production units? Into 50,000. How much is it coming to? 75. We have incurred 90. 75 is observed. That means under absorption? Yes, sir. Okay. Sir, should I write under absorption 15? No, not required. ಸುಮ್ನೆ ಮಾಡಿ ಸಾಕು. Doing this only is big thing. Okay. Sir, should I write under absorption, over absorption? For this kind of question, not required. Oh, works cost or cost of production we got because in between there is no other item. So works cost is equal to COP here. Administrative expenses is fully fixed. Fully fixed. 45, yeah. 45 is for how many units? 60,000. So I will fix predetermined overhead rate first. How is it? 45,000 divided by 60,000. But now, how many units we have produced? Into 50,000. So how much we have observed? 45,000 divided by 60,000 into 50,000. Hope you understood that predetermined rate, what I am explaining. We already learned all this in overhead chapter. 37,500. Because don't stand now and ask, sir, what is that predetermined overhead rate? Selling and distribution. 30,000 is total. In that 60% is variable, right as it is. Coming to fixed, how much is fixed? 12,000. Now I would have fixed a predetermined overhead rate. 12,000 divided by 60,000. Okay, whatever predetermined overhead rate you will get, you will observe it for each and every unit produced. How many units we have produced? 50,000. So you will get how much? 10,000. 10,000 is what you have observed. If I ask you how much is under absorption here? 2,000. 2,000. You need not write it, but just for your knowledge. So cost of sales is 9,50,500. No opening stock, no closing stock. You need not worry. Yes, no. So sales is 10 lakh. That means balancing figure is profit tax. How much? 49,500. CP. CP means what? Costing profit. Oh, it is assumed that the company sells what it generally produces. That is normal production. Normal production means 50,000, not 60,000. Sir, why not 60,000? You can sell what you have not produced. You can sell only what you have produced. Na? What they have produced is 50,000 and always sales is 50. They told no opening stock, no closing stock. That means it is understood that production is also 50. Clear? Normal production means capacity. They had a capacity to produce how much? 60,000. Did they produce so much? No, only 50. This sentence might be confusing. Please don't take it in a wrong. Oh, the last part here, reconciliation. They have taken costing profit as a base. Sir, can I start with financial profit also? Nothing wrong. Nothing wrong. Okay, one by. Guys, what and all is the differences? First, start with financial only. Start with financial. Anything interesting here? Only one thing, interest. Interest is the interesting thing. Okay. Rest all we will check it in cost books. What is the difference? Okay. 15,000 is pure financial items. I am starting with costing profit. Because of this, my financial profit has gone up, whereas my costing profit is same. Now I'm starting with costing profit. Any adjustment I can make is for costing profit. My costing profit is same, whereas my financial profit has gone up. What will I do now? Add interest and dividend expense. Now let us find out the difference amount. Material, I will change the color. Material, is there any problem? No. Wages, no problem. Then coming to factory expenses. How much is observed here? 135. Total put together 135. Whereas here it is 150. 15,000 less. 15,000 less, guys. Because of this, costing profit has gone up. Gone up. You are charged 15,000 less. So that means your costing profit has gone up. My costing profit is at starting point. What should I do? Bring it down. Deduct. So deduct 15,000. So you can see this is taken care of. Here, deduct 15,000. Okay, sir. Next item, administrative overhead, 37,500. Whereas in financial books, 45,000. Again, charged less. Again, charged less, guys. So because of this, my costing profit has gone up or gone down up, gone up. You are undercharged. Undercharged. So now what should you do? Deduct. The last one. Here, how much you have observed selling and distribution? 28. How much you have charged here? 30. That means 2000 less again. Yes, under observed how much? 2000. Now we have to take it. Selling and distribution over under observed how much? 2000. Because of this, my costing profit has gone up. Because in financial we have charged 30,000. So financial profit has come down by 30,000. Whereas my costing profit has come down only by 28. Now 2000 plus is there. What should I do? Deduct. Deduct. Okay, guys. Taken care of. So profit as for financial books is 40,000. And in this kind of questions, you can also cross check whatever you have got is right or wrong. Is that clear? And whenever you are writing, now please show the differences calculation. Some students will straight away write to 7,515, but they don't show how they derive it. How they derive it. Find out the difference, like 30 minus 28, like that. You show it as. Oh, coming to the last question. One last question. HK Piona Company showed a net loss of 4,16,000 as per their financial accounts for the year ended 31st March. Guys, financial loss. Financial loss. The cost accounts, however, disclose a net loss of 3,28,000 costing loss for the same period. The following information were revealed as a result of scrutiny of figures of both the sets of books. Factory overhead under recovered, administrative overhead over recovered, depreciation charged in financial accounts, depreciation recovered in cost. That means 10,000 difference is there. 10,000 overcharged in cost tax or undercharged in financial. Interest on investment not included in cost, pure financial income. Income tax provided, pure financial expenses. Transfer fee, credit in financial books, pure financial income. Stores adjustment, credit in financial books, pure financial income, 2000. Prepare a memorandum, reconciliation account. Prepare a memorandum, reconciliation account. Okay. They are not asking the statement account. Simple. Whatever you are supposed to add, credit side. Whatever you are supposed to deduct, debit side. Clear now? Whatever you are supposed to add, credit side. Whatever you are supposed to deduct, debit side. Okay. Sure. We'll go to the solution. Guys, as it is a loss, you have to be careful. Listen here. It is a loss. But while analyzing, you will analyze from what point of view? Profit point of view. Okay. They are starting with costing loss. Costing loss of how much? 3,28,000. 3,28,000. Forget about loss. Once you write, guys, if it is a loss, start it from the debit side. Even if it's a statement, we will start it with a bracket. Na? Here, you will start it on the debit side. Clear? Yes. And at the end, check which side is more. If debit side is more, again it is a loss as per other book. Loss as per other books. So balancing figure will come on which side? Credit side. But it is having a debit balance. So we call it as loss. Sir, what if by chance I started with the loss, sir, but I ended up credit side more, sir? Credit side more. That means it is profit as per the other book. It can happen. Very rare scenario. It can happen, guys. Oh, let us see one by one. Let us see one by one. Guys, chalo, let me check with this only. Administrative overhead over recorded in cost 4,000. So where shall I go? Over recorded in cost. Oh, 14,000. Let me put it here. Here 10,000. Oh, my costing loss is the starting point. Because of this, my costing profit has come down by how much? 14. Whereas here financial profit has come down by only 10. So here further down by how much? 4,000. It is further down by 4,000. So my financial profit has come down only by 10,000, whereas my costing profit has come down by 14,000. So there is a gap of 4,000. So my starting point is costing profit, not loss, costing profit. Analyze only from profit point of view. Now, if I have to match it with financial profit, what should I do? Add. Anything to be added should be shown where in the account? Credit side. Credit side. Hope you understand. So we are showing it on the credit side. Then depreciation overcharged in cost. Very similar to this. Very similar to this. 10,000 overcharged. I guess 120, 130, na? Hmm? Hmm. So here it is 1.3 lakhs. 1.3 lakh. Here it is 1.2 lakh. Because of this, my financial profit has come down only by 1.2 lakh. Whereas here it has come down by 1.3 lakh. So extra down by how much? 10,000. So my costing profit has already come down excess by 10,000. If I have to match it with financial profit, what should I do? Add it. Add it. Whereas in the account, anything to be added should be shown on which side? Credit side. Credit side. Don't worry about loss though. Loss we already taken care. We have written on the debit side. While analyzing, should we add it or deduct? Please go with profit analyzation. If you are try to analyze from loss point of view, it will confuse you. It will confuse you. Okay, so we've taken care of this. Then interest on investments not included in cost. Guys, because of this, my financial profit has gone down. Sorry, gone up. Whereas my costing profit is same because we have not recorded it in my costing books. My starting point is costing profit now. If I have to match it with financial, what should I do? Add it. Anything to be added should be recorded on credits. Same way transfer fee and stores also same story. Credit only in financial books. Because of this, my financial profit has gone up. If I have to match my cost profit with financial profit, what should I do? Add. Anything to be added should be credited in the account. Should be credited in account. So we took care of all this. Now coming to this. Factory overhead under recovered in cost 6,000. Under recovered means we are charged less. Because of this, my costing profit has gone. Now my starting point is costing profit. If I have to match it with my financial profit, what should I do? Bring it down. Theta. Anything to be deducted should be recorded on which side of the account? Debit side. Debit side. Clear? Yes. Then income tax not provided in cost. This is an expense recorded only in financial books. So my financial profit has come down. Whereas my costing is same. Why? We are not recorded in costing books. Now my starting point is costing profit. If I have to match it with my financial profit, what should I do? Bring it down. That means theta. Anything to be deducted should be debited in the account. Should be debited in the. Is that clear? Now check which side is more. Here debit side is more. So balancing figure would be on the credit side. Loss as for financial books. Now you may ask me, sir, same question. What if it is a profit? Guys, the adjustment will be same. Instead of loss, if there is a profit, you will scratch this. Means you will not scratch in the sense because same question you will not have same. You will now write net profit or profit as per cost books on the credit side. Automatically everything else will be taken care. Everything else will be taken care. Same way. Sir, at the end, we have to check which side is more. Normally, if you start with profit, credit side would be more. So on that, in that case, you will write balancing figure on the debit side. That would be the profit as per the other. Sir, what if by chance I started with profit, sir? I added and deducted, credited and debited. When it is profit, this all is considered to be added. This all is considered to be deducted. Okay. What if by chance the debit side is more, sir? Can happen. Very rare cases. Okay. In that case, balancing figure will come on the credit side. Okay, it is actually debit balance, but you will show it on the credit side. But it will be loss as per the other book. Loss as per the opposite book. Very rare scenario, guys. Means you may start with profit, ended up being in loss. Or you start with loss, ended up being in profit. But be ready for that loss. Because what happens now, if that is the scenario in the question, students feel that, oh, I have done something wrong. I have done something wrong because they are in the belief that when we started with the profit, we should end up also getting profit on. We started with the loss, we should end up getting loss on. Normally, that is the procedure. Clear. But can it be opposite? Yes, it can be. Yes, it can be. So mentally be prepared for it. Yes, guys. These are the questions on this chapter. So we are done with the first module of ICI material.